Corsair Gaming, CRSR. That is the new ticker symbol for this IPO. They're going to be IPOing very soon. As an analysis of this company, this is StockerFinance. I'm your host, David Scheuer. Make sure to follow me on Twitter at StockerFinance for more information. So for this video, we're really going to be referencing the S1 form. You may also be familiar with the F1 form. What this is essentially a sales pitch to us as investors. So it's giving us all the information we need, or at least a decent amount of it, some financials, which we're going to take a look at, as well as just kind of a sales pitch of why we should invest and consider this company as an investment. And then after that, it basically gives a ton of reasons for why we should not invest in the company, all the risks associated with it. Now, we're really just going to be looking at the sales portion of it, because that's the information where they give a lot of the numbers, the growth factors. We look at some of their balance sheet as well. And then we'll take a look at a couple articles that I think summarize this company. And we're also going to try to value it and put a value on this company so that when the IPO comes, we can decide whether it's overvalued or undervalued, etc. Now, the first thing I did here is I kind of highlighted certain sections of this prospectus, this S1 form, and basically, you know, it's a pretty long form. There's a lot to read here, and if you want to take a look at it, you can go ahead and look it up, or I'll try to link it below. But I just highlighted what I think was the important segments of this form. So, just an overview of what this company does. They said they're a leader of they're a global provider and innovator of high-performance gear for gamers and content creators. They're an industry leader in gaming gear that helps digital athletes from casual gamers to committed professionals to perform at their peak across PC or console platforms. And our streaming gear enables creators to produce studio quality content, share with friends, or to broadcast to millions of fans. We design and sell high performance gaming and streaming peripherals and components and systems to enthusiasts globally. We have served the market for over 2 decades, and many of our products maintain a #1 U.S. market share position. According to data from NPD Group and internal estimates, we have built a passionate base of loyal customers due to our brand authenticity and reputation as a provider of innovative and finely engineered products that deliver an uncompromising level of performance. So basically, they have 2 different sectors to their business. They have one, which includes their gaming keyboards, mice, headsets, controllers, as well as other streaming gear, including capture cards, studio accessories, among others. And their others is more components and systems, which it's not like AMD, they aren't, or Intel. They're not making, you know, graphics cards and computer chips along those lines. They're simply doing things like PSUs, cooling solutions, so like, you know, different cooling types of units, probably fans as well, computer cases, DRAM modules, as well as high-end pre-built and custom-built gaming PCs, among others. Now, this is pretty interesting. I think right now, with everyone being stuck home, they're going to perform very well. And if we look at their financials in a second here, we'll see that they have performed very well. Now, on top of this, I think, although they're just in the gaming sector right now, I think if they kind of moved over and, I guess, kind of just try to, you know, dabbled in the office space a little bit, they could benefit greatly, because this office sector of the market right now, they're using Zoom, they're using video, and they're staying home and working from home so much, and they're going to continue to do that even after this whole, you know, situation is over with. They're going to continue to do that because companies are realizing it's just simply more affordable and that they actually can do it, and that they might not need an office ever again. So if more people are spending more time on their computers, if they could offer more office equipment type things, but use the comfortableness and the, you know, the quality of the gaming headsets, the gaming chairs, mouses, etc., which in my opinion are just much higher quality than office equipment and office mouses, they could benefit greatly. They might just have to rebrand a little bit and then launch into that sector. But that's just an idea. Anyways, let's move on here. So our gear is sold to end users in more than 75 countries, primarily through online as well as brick and mortar retailers, including leading global retailers such as Amazon and Best Buy, and through a direct online channel. Due to our gamer and creator-centric design philosophy, we've received over 4,000 product awards from magazines and websites in approximately 45 countries since 2016, of which more than 3,500 were gold, Editor's Choice approved, or similar awards. Yeah, including more perfect 10 out of 10. They're just saying that they have good products. Now, we believe our brand, market position, and operational excellence will allow us to continue to capture a growing market share of the rapidly expanding gaming and streaming gear market, estimated at over $36 billion by 2019 by John Petty Research. We intend to continue to grow by offering market-leading gear. Basically, he's just saying that we intend to grow and invest in our company, marketing, etc. We can just kind of skim through this. Now let's look at their market opportunities, the next sector of their, I guess, sales pitch here. Now, the global gaming PC and streaming market, including peripherals, components, and pre-built PCs and laptops specifically designed for PC gaming, totaled approximately $36 billion in 2019. In 2019, there's an estimated 524 million PC gamers, which is just an insane amount of gamers. That's awesome. Comprising committed, competitive, and casual PC gamers. Approximately 94 million of these gamers spend over $1,000 on their gaming PCs. These gamers, comprising committed and competitive PC gamers, represented approximately 30 billion of the global gaming PC gear market. Further, approximately 27 billion of these gamers, comprising committed PC gamers, spent over $1,800 on their gaming PC systems, representing 18 billion of the global gaming PC market globally. Globally, committed, competitive, and casual gamers are estimated to have spent an average of $651, $179, and $14 respectively on gaming PC gear in 2019. Basically, there's a ton of gamers out there spending a lot of money, and it is a growing market as well, which is a great sign for this company. Now let's go ahead and look at what else they do here. So they have a differentiated gamer. This is kind of, I think, just a list of different goals they have, as well as a list of different things that they do. So they're an innovative driven company, they say. They said that since their inception, they've concentrated our efforts in helping gamers succeed. They realized that people were simply using, office equipment to video game. And when you play video games with office equipment, which I've done multiple times, it sucks. It's a lot better to play with, proper keyboard, mouse. And then if you're streaming as well, to have high quality, streaming equipment definitely helps for that market as well. So it's kind of a unique market here, but also a big and growing market in terms of the broad gaming market. Now, if we go ahead and look at the financials here, it's pretty crazy and a bit messy to look at. You see there's a predecessor and a successor side to this. I believe there's some sort of buyout that happened, which is why that took place. And it's a pretty messy balance sheet that we're looking at. So to simplify this, I extracted some of the numbers, put it in my own balance sheet right here, just using total revenue, net income, and operating expenses as some of the most important numbers to look at. And then what I did is I compared the growth. So I took the 2019 compared to 2018 and did the growth of that, then 2020 to 2019. So the first percentage is 2019 to 2018. Second percentage number that you're looking at is 2020 to 2019. So in total revenue, it grew 14.54% from 2019 to 2018. Then from 2020 to 2019, it grew 20%. And for the 2020 numbers, if you look right here, you'll notice that it's 6 months ended on June 30th. Because of that, I simply just multiplied the 6 months ended numbers by 2 to get a full year for 2020. Now, I put a disclaimer at the bottom of this for a reason. Number one, these numbers are in thousands of US dollars, so 1 million would equal a billion. On top of this, things to consider that winter and holiday season is very good for the video game industry. And I wouldn't be surprised if by the end of this year, it's actually significantly more, at least net income and revenue is significantly more than simply double, which would change these percentages by quite a bit. But we'll see what happens. So anyways, if we look at total revenue, again, it grew by 14.54% from 2019 to 2018, 20% from 2020 to 2019. So great growth there, and the growth is increasing as well, although it definitely got a boost from this whole situation that we're in. Now, if we look at net income, it's also growing. They actually have negative net income in 2018 and 2019, but because everyone's staying home right now, people aren't going out as much, especially during the whole lockdown situation, they grew substantially. So they grew by 63% and then 117%. Incredible growth there. And now they're positive 47, just over 47 million in net income. And that's just doubling it. I think it's actually going to be much more than that, most likely once we get through the holiday season. Now let's look at their operating expenses, though. And this is when stuff does get a little worrying because their operating expenses are growing faster than their total revenue. You'll notice that 2019 to 2018, it grew by 14.79% compared to their revenue, which grew by 14.54%. So almost the same, but operating expenses still growing a little more. And if we look at the 2020 to 2019, it grew by 25.12% compared to 20.37%. Now, net income grew by a substantial amount, but still, if operating expenses continue to grow faster than their total revenue, it's really going to cut down on their margins, and it's going to hurt their company, and their net income is probably going to eventually start to decrease. Unless, their holiday season is phenomenal and these numbers change significantly. So, just something to kind of keep in mind there. Whenever I see an operating expenses growing faster than total revenue, it is something just to kind of worry about and keep your eye on. But it's not drastically different. It is pretty similar to total revenue, which means their margins are most likely staying pretty much the same, especially if total revenue increases by the holiday season. Now let's go ahead and look at the rest of this here. This is all their cash, assets, as well as debt. What I did again is, extracted some of these numbers. I did some simple calculations because how should we value this company? It's a pretty hard question to do, especially when the first problem we have was we have no clue how many shares they plan on offering. So there's no clue to how to value a per share value if we don't know the number of shares. If they offer 100 million shares, if they offer a billion shares, if they offer just a couple million shares, the number could drastically change, at least per share. but we can kind of get an estimate of what the market cap might be for this company without the number of shares. So we're not going to talk about total or per share price, since we can't really calculate that without any number of shares. It could be pretty much anything, depending on what number of shares they choose to offer. And the number two problem is they don't have all the current financial information. As I said, we're 6 months into 2020, so that'll change significantly. They also held back and on some of the information they provided us with. But we do know their total assets is just over $1 billion. So 1.1 in terms of thousands, it's a million, 126,904. So that's $1,126 million in assets, which is a significant amount. And their shareholders' equity, which is also kind of known as their liquidation value, simply their total assets minus their total liabilities, which gives you 240,506. Again, that's in thousands, so that'll be $240,506,000. That's a lot. I mean, that's a pretty substantial amount of money for a company that said they're IPOing for a $100 million IPO. Now, I also didn't estimate their PE ratio, and I kind of compared this to some other companies out there in the gaming space. If we look at gaming companies, technology companies right now, all computer type companies, their PE ratios are very high, usually above 25. Now, I gave a conservative estimate of just a PE ratio of 25. And if we take their earnings, which is their net income, I just multiplied that by 25. I know it's not exactly how you do it, but just a rough estimate here. I would get a market cap of around $1 billion. Now, that to me seems pretty reasonable for this company. $1 billion, they have $240 million in shareholders' equity. Total assets is $1 billion. And their revenue is growing as well, although we saw operating expenses growing as well. If they continue to grow at this rate, it's going to grow pretty substantially. I mean, $47 million in net income is quite a bit, and it's going to continue to grow as well, hopefully, as more people choose to buy more gaming gear, streaming gear, etc. If they go into the office space at all, I think it'll grow even more than that. So that's definitely pretty interesting there, and I think a $1 billion market cap is not too far-fetched. Let me know what you think of that, though, if you disagree, if you think it's much higher. If we look at Razer Inc., which is also kind of a gaming, they make gaming mouses, keyboards, etc., they're valued at $1.787 billion. So almost double what I'm guessing here for Corsair. So if we continue on here, and first I'm going to take a look at some articles before I kind of summarize this up. So we'll come back to that in a second here. Anyways, there are some things we got to keep looking at, and this is an interesting article that I think had some good points about this company. Now, they claim that the number one seller of high-performance computer memory, cases, power supplies, coolers, and gaming keyboards, as well as second in performance controllers and streaming gear. Though one of these categories stands out. Of that $1.97 billion in 2019 revenue, $429 million came from Corsair's best-known business since 1998, selling RAM module slots into PCs. So almost half their revenue is from one segment, which is definitely something to be aware of. Now, interestingly, aside from sourcing the memory chips from vendors like Samsung and Hinks, which I definitely pronounced that wrong, Corsair manages the RAM business all by itself in Taiwan. While almost all of Corsair's other gear is produced by third-party suppliers in Asia, the latter isn't unusual in the electronics industries, as iPhones are produced in factories operated by Foxconn, not Apple. Which, that's not an uncommon thing at all for manufacturing companies. It sounds like the only other product that makes itself are from the businesses it recently acquired, which is Origin PC's boutique gaming rigs, as well as Scuff's Gaming's customizable controllers. It also bought Elgato's streaming gear business in 2018. All right, so now this is something kind of to be aware of, and I guess also be kind of scared of, in my opinion, because cloud computing is something that we've seen some of the biggest companies in the world, Google, Amazon, Microsoft, even Alibaba, that are investing heavily in, and it's growing pretty fast too. Now, they said cloud computing may seriously harm their business. This is a direct quote from Corsair. They said, cloud computing refers to a computing environment in which software is run on third-party servers and is accessed by end users over the internet. In a cloud computing environment, a user's computer may be a so-called dumb terminal with minimal processing power and limited need for high-performance components. Through cloud computing, gamers will be able to access and play graphically sophisticated games that they may not be able to play otherwise on a PC that is not fully equipped with the necessary and often expensive hardware. If cloud computing is widely accepted, the demand for high-performance computer gaming hardware products such as the PC high-performance memory, pre-built and custom gaming PCs and laptops, and other PC gaming components as well, could diminish significantly. As a result, if cloud computing gaming were to become widely adopted, such adoption could seriously harm our business. I agree. This is pretty scary, and it seems like the direction is cloud computing. This is definitely something to watch out for this company, and that's why I keep saying this company should go more into the office sector with operating, comfy headphones, microphones, streaming setups, maybe good video cameras, or maybe a better camera that you could just attach onto your laptops to improve your laptop camera for streaming or for zooming. I think they really need to go more into the hardware section in terms of that and expand outside of just the gaming sector. Because if cloud computing does take over and I'm able to game on a Chromebook or something instead of a $2,000 gaming PC, it's really going to diminish a lot of their business, especially when, almost half of their business was from selling RAM modules. So if you no longer need to sell RAM modules to people, if people are just playing on laptops, that's going to be a pretty big hit to their business. So definitely something to watch out for there. Now, on top of this, they valued Scuff Gaming at the time of purchase, into some insight into why. So they paid $136.3 million for this Pro controller brand. I personally think that is a lot of money for this brand. Scuff lost $18.5 million in 2019 on just $68 million in revenue. So their margins are awful. But it's not just the business that Scuff represents. And also, I think part of that loss is simply because Scuff was advertising like crazy. I think Corsair was part of that. If you notice, tons of YouTubers and people were sponsored by Scuff. I think they did a lot of advertising to try to get their brand name out, which definitely worked. But in my opinion, it's a very niche thing to use. I don't know. Personally, unless you're a hardcore gamer, I only know my friends who really play video games a ton to use it, and to pay that much money for this company, which is definitely very niche, is, I think, definitely kind of a risky maneuver by Corsair, especially when it seems like they could just, Scuff's little controller things, they could make their own. It doesn't seem like that difficult thing just to produce themselves when they already make a lot of different types of gaming gear. Now, it's not just the business that Scuff represents. Corsair's transaction balance sheet shows that it's valued its patents higher than its brand name or technology. So that makes sense. Scuff has patents on certain different technologies, and Microsoft licensed those patents to create the Xbox Elite controller. Sony PlayStation has a relationship with Scuff as well. So that makes a lot more sense to me. I didn't really realize there. Should have read this whole thing. Anyways, definitely interesting with the patents there, but still, that's a lot of money to pay for this company that's losing a pretty significant amount of money every year. We'll see how 2020, if it changes that. Now, here's my summary. And my buy valuation for this company, if it's under $1 billion. So if it comes out with its IPO and it's currently trading at under $1 billion, I'm going to consider buying this company. And that's simply because I think it has a lot on assets. It's growing significantly. And in the short term, I see a lot of positive. The long term kind of seems unclear, but I see that this winter, I think, is going to be very positive for this company as more people are staying in. I think it's going to have some good quarters coming up. Now, I'm just going to stay back and watch the company, maybe dabble in it, maybe not. If it's around $1 billion market cap, I think it's getting a little high there, as I said, but still sort of around my valuation with this company. Then I'm going to stay away for a bit if it's way over $1 billion. So if it's valued at like $5 billion or something like that, definitely going to stay away. That's way too high of a valuation for this company that's only doing $47 million in net income every year with, $240 million in shareholder equity. And then the long term is definitely, there's a lot of unclearness, especially with their cloud gaming. The quote that I read to you guys, that's definitely a little scary for this company, as well as their company expansion. Again, I think they should go more into the office, comfy equipment there, helping people get better video quality in terms of their laptops, maybe an attachment you could put on your laptop, something like that. They definitely need to expand more into, as if cloud gaming does start to take over, they need to get more of their business diversified into more external uses, such as, the mouses, keyboards, chairs, etc., and not just with half their business being in RAM modules. That's definitely something that I don't exactly like about this company. I would like it to be a little more diversified than that. Anyways, thanks for watching. Let me know what you think of this company, how you value it, if you plan to pick up some shares on its IPO. Once I get more information, I might make a follow-up video, a part 2 to this, since we are limited with the amount of information and financial statements we have for this company. Please subscribe. Make sure to check out these videos and follow me on Twitter at StockerFinance for more information. Peace out.